Hello, everybody, and welcome to another Coffee with Carl. I am your host, Carl Zoellner. I'm one of the attorneys here with Anderson Business Advisors, and today we're going to talk about why short-term rentals are taxed differently. As you can see, I've got my coffee with me. We come across this a lot, and a lot of folks are looking to get into that short-term rental space because of the ability to multiply those ROIs on those properties, because for a short-term rental you can get much more on a daily basis for rent than you could in most cases for a monthly. So in learning about short-term rentals, though, we have to distinguish between the two because the IRS distinguishes between the two. In most cases, short-term rentals are going to be taxed as active income, not as the passive income we're used to on rentals. Many CPAs out there are still missing this. We have a lot of clients that do these, so we are tapped into what we need to be looking at for these properties and for these types of investments. Now, the idea here is that basically when you get into the short-term rental business, you're getting into the hotel business, and hotels are charged or taxed as active income as well. So let's take a look at where we find this information, and that way we can discuss it a little bit more. In IRS Publication 925, they specifically target taxpayers who have short-term rentals, and the formula they use to dictate what a short-term rental is the total number of days rented divided by the total number of bookings. And that number in that formula equals your average length of stay. So say if you rented a property for a total of 20 days and you had 5 bookings that encompassed those 20 days, then you would have 4 as your days as your average length of stay. Now let's go to the rule. The rule is if the average length of stay is less than 8 days, it is a short-term rental and subject to the full tax liability for active income. Okay, so for those of you out there, maybe new clients or considering becoming clients, we use a lot of the terms active and passive income. So for rentals is generally passive income, meaning the income that passes through to you is taxed only at your applicable individual tax rate. With active income, it's your individual tax rate plus 15.3% for, old age, death survivors, basically self-employment tax. So when we say active, we mean with the 15.3% self-employment tax. And when we say passive, we mean just coming through at your normal rate. Now, there are several solutions out there, depending on what your business plan is for your Airbnb, on how to restructure basically this new tax liability. There's the ability to do long-term leases in conjunction with allowing to sublease. We call this a master lease structure in order to mitigate some of that active income. Also, as well, is if you're only renting out or basically have a very short period of time during the year where you can rent out your property for Airbnb availability, that you can take advantage of that IRC 280A deduction, meaning where the IRS allows for you to rent out a dwelling for up to 14 days without from that individual taxpayer, can take the benefit for up to the 14 days and not have to pay taxes on the income as well. So for each of you, much like everything else, there's going to be an individualized structure for the individual type of business you are doing. The liabilities on not knowing the Airbnb world and ending up in a tax problem are likely. Most of you know that our main offices are here in Las Vegas. This is a fine that was imposed on a Las Vegas property that was not working within compliance at the time. They'd rented for 138 days, generated about $100K in revenue, and the city fined them almost $73,000. So we like to give examples where we can. This is one that's local to us, so I like bringing it up. But there's lots of ways, and it's very profitable to do an Airbnb or a short-term rental business, but we really need to make sure that structure's hammered down first. As always, it's been great. Thank you for your 5 minutes. It's been great having coffee with you today, and Like I said, we've put out a ton of free content, whether it's on our YouTube channel, Tax Tuesday with Toby, and almost any source that you can find social media or content, we're on it. So until next time, it was great having coffee with you. Join me for the next episode.